Okay, hello there, everyone. Thank you very much for joining our session today, or indeed, thank you for watching this recording after the fact. My name is Joseph Sharon-Carney, and I'm Insights Director of Business Payments here at RFI Global. And a little bit about myself and my role. I've been with RFI now for coming up to nearly 7 years, and I oversee all of the research projects we do in with regards to anything to do with business payments, merchant acquiring or acceptance, new payment methods, long-standing payment methods for all markets west of the Middle East, essentially. And what that really entails is overseeing all different aspects of that research process, from initial survey design, scripting, testing, QA, analysis, all the way through to presenting as we have today. So today we'll be looking at the future directions for the SME payment ecosystems with an exclusive focus on the UK landscape. And in terms of our agenda for today, we'll first be looking at how SMEs are making payments and what some of their drivers of payment preference are, what is actually driving acquirer choice or acceptance provider choice, how can we actually improve the digital capabilities and customer service understanding for those acquiring relationships? And we'll be rounding off with a little bit of a forward look at the openness for using AI for certain payments innovations and whether or not SMEs really do think that there is a place for AI. Do they feel negatively towards it? Do they feel positively towards it, etc.? And of course, we will round off with any questions just at the end, but this recording will be shared as well for anyone that does want to review it after the fact, or anyone that does have to potentially leave early. So without further ado, then, let's start off with how SMEs are paying for expenses. And there are a few things for us to pull out from this slide. And if we look specifically in the middle three payment methods, so the different types of cards SMEs are using, what we can see there is that personal card use has been declining quite steadily as far as data goes since 2018, and this has been supplemented by digital cards, digital methods, and indeed true business credit and charge cards and true business debit cards. So we'll be talking a little bit more about this in a second, but what you'll notice is that going all the way back to 2018, and especially during the pandemic, so 2020 through to, well, let's say the end of 2021, we can see that pretty much all payment methods did experience some decline during the pandemic, with the exception of business credit and charge cards. But the one that did have the most notable decline and has not really recovered since then is the paper methods of cash and check there on the left. Now, one important thing to consider here, we would not expect cash or check use to decline to zero, because the way we ask this question is, how does a business typically pay for expenses? So we can see there that during the pandemic, a number of businesses did say, no, we no longer will pay with cash or check, but still a few holdouts there thinking that, yeah, it is the pandemic, but we probably will return to using paper methods. And we do see that as of 2022. So there has been a little bit of a bounce back in terms of cash and check, but definitely behind the sort of pre-2020 levels, especially for cash. Personal card use had seen a much more steady decline, no immediate drop off during the pandemic, but the big resurgence we saw post-pandemic was definitely in the case of digital payment methods, so the direct debit, standing orders, or electronic transfers and wire payments. Now, if you're wondering what is actually driving this increase in digital use, truthfully, it is not really limited to one specific type of expense. It is sort of quite split across various different expense types. Of course, recurring payments such as average bills, rent, any sort of recurring marketing spend, etc., is something that SMEs are using digital methods for. But when we actually take a big look at this altogether, we can see just how many SMEs are actually using digital card or paper methods, with under 4 out of 10 now reporting using paper methods. So it's significant decline in that from 2018, whereas cards and digital have seen corresponding increases. So I'm talking a lot here about corresponding increases, particularly from, say, cash and personal card use onto credit and charge card use. So naturally, one question, is this a hypothetical change or is this something that we can actually back up with any existing data? And the answer is yes, of course, we can back it up. And what we're just looking at now are why SMEs initially apply and initially take up a credit or charge card. And there are a number of different attributes here, and there are a number of different factors. But what you can notice is that streamlining expense management is a key driver, of card uptake. And you'll see it there. We've got managing expenses more effectively as a top three factor for all SMEs with up to 10 million. And we do ask it in a slightly different way once we get above that size of business, but we can still see there the similarities between the larger SMEs and their smaller counterparts. Now, outside of that, what about the changes in cash? Well, we can see there that, yes, reducing cash usage is an explicit driver of card uptake across the SME landscape. And even further to that as well, what about personal cards? Well, that does come back to the managing expenses more effectively, but we do also believe that when we see aspects such as separating commercial and personal liability or improving compliance and control for the larger SMEs, that this is in relation to personal credit and charge cards. Another potential hypothetical reason we have seen this change away from personal cards onto business credit and charge cards is due to the changing interest rate environment. Naturally, a lot of businesses will either never have experienced interest rates of over 2% or haven't experienced those interest rates for quite a long time. So understandably, separating that liability can be quite an important factor in that initial card uptake and moving away from that personal liability for those card holders. Now, this is why a business is initially taking up a credit or charge card, but we can also see exactly why do businesses choose payment methods over each other. And when we look at that driver of preference, the simple and honestly truthful answer is that convenience is absolutely king when SMEs are making payments. So you can see there on the furthest left that the idea a payment method is more convenient for the business is not necessarily limited to one specific payment method. Yes, we do see there that credit and charge cards, it is sort of there is a lower perception of convenience when compared to other payment methods, but convenience is still the number one driver of preference for credit and charge cards, even if it is less so than other methods. One of the reasons for this is right down here when we see that 1 in 5 SMEs who most prefer a credit or charge card do so because it enables them to earn rewards. Some of the other different areas as well, particularly around the digital methods where we have seen that very large increase as of the most recent waves, is this idea of easier administration and reconciliation. So if we think about a digital payment method compared to, say, paper methods there, which we can see is much lower, well, if a business is using electronic transfers rather than cash, there is going to be perhaps less of a need for manual reconciliation, especially if there are employees within the business making payments more so than perhaps any initial owner operator or financial director. So this is, of course, looking at why businesses prefer to make different payments with certain methods, but how does this actually compare to accepting payments and specifically accepting card payments? Well, one of the big factors for an SME, especially post-pandemic, is which merchant acquirer are they going to choose? On average, we see that a card accepting business will state that around 55 to 56% of their revenue is incurred via card payments. So quite a very sizable amount for the 65% or so of SMEs that do accept cards. So naturally, when you are talking about something that makes up such a sizable proportion of a business revenue, choosing the right acquirer is very important. And what we can see here, going all the way back to 2019, throughout the pandemic, those drivers of acquirer choice have remained very stable and very consistent, with trust in the provider and the ease of doing business being those top two factors overall. Now, I won't talk about these in too much detail here, as on the next slide, we will be going and drilling into them in much more detail. But when we look outside of those top two, we can also see, excuse me, we can also see attributes such as the speed of settlement, the level of security and service, all playing important roles. Speed of settlement naturally is very important because it is the determinant of how long a business is waiting for its money before they can use it. And if we're wondering what speed businesses want, is it T+2, is it T+1, or is it the same day settlement? Well, the honest answer is it is as soon as possible, really. The UK is an interesting market where we as consumers do have a lot of experience with instantaneous payments thanks to the faster payment system. Something that not every market has, and something that business owners may not entirely understand, particularly at the lower end of, say, this sub 100,000 in revenue, that there is a lot of work that goes into the background. So yeah, speed of settlement, naturally very important, and as fast or as close to T+0 is what we should be aiming for. Elsewhere, the level of security and fraud protection, I think this is quite self-explanatory. The customer service and support one is probably one that is quite surprising here because it supersedes and massively outweighs the importance of fees and charges. Now, you'll notice here as well that during 2021, when we had essentially the very heavy January and February lockdowns, that service did become substantially more important than it had done previously and more important than it has been since then. And one of the reasons for this is that businesses will look to financial services providers for essentially guidance, for assistance, particularly in times of economic turbulence. As for fees, well, it is surprising to not see this as a top five factor, because we are absolutely not saying that fees are unimportant when choosing a merchant acquirer. However, it is more a question of value for money. Essentially, it doesn't really matter how cheap a solution is if one, the provider isn't trustworthy, or two, if it's incredibly difficult to actually use the solution. So aside from just this idea of value for money, there is also the challenge of how businesses may not be able to seamlessly compare pricing across different acquirers. And they also do see it, for lack of a better term, as a necessary evil. Businesses are somewhat sympathetic to pricing and fees because they themselves, they have to charge, and they understand that financial services, payments, companies, banks, etc., all have to make a profit as they do. So the better idea, rather than say always trying to offer as low a solution as possible, is to provide additional value to merchants. And one of the ways we can do that is by really understanding what it actually means to be trustworthy and what it actually means to be easy to do business with. And with that, if we look on the left-hand side there, we can see what actually makes a provider trustworthy. And interestingly here, we do see some overlap with some other attributes. So we can see there, number one, the security of finances. So is our money safe? Is it secure? We're not going to lose any of our cash flow is the number one determinant of trustworthiness. But following that, in a relatively close second, and we have seen these even at certain times, is around the clarity of the fees and charges incurred. Not necessarily that it is a low cost, but that the costs are transparent and likely stable throughout the relationship. Elsewhere, we also have aspects such as reliability, issue resolution, and the measures to prevent any fraudulent transactions or indeed fraudulent use of any business details. Now, what is interesting here, because yes, there is some overlap, and you could argue that, this is much more closely related to other areas we saw on the last slide. But when we start actually breaking this out by the size of the business, we do see some very notable changes. For instance, the top two there, finance security and fee clarity, very much a key driver of trustworthiness for those with sub 500,000 in revenue. But when you start looking over that, and indeed even more so over 1 million and over 10 million, we see aspects such as the measures taken to prevent fraudulent transactions and also protections around customer data to become much, much more important. So fundamentally, yes, there is overlap, but trustworthiness is such an important and such a complex topic that you can really see why it is so prominent and why it absolutely shouldn't be lumped in with other areas such as security, reliability, etc. Now, on the other hand, when we're talking about what makes a provider easy to use or easy to do business with, well, we can see there that the number one factor is around the simplicity of the solution for the end customers. And I really, really feel you absolutely cannot overstate just how important the end customer is to merchants. It is fundamentally one of the most critical parts of their decision-making process. And if you think about, say, a payment terminal, for instance, well, if it's not smooth and it's not seamless to use for customers or the staff, then all of a sudden it can have a huge knock-on effect to all aspects of their operations. But it is not just around the overall simplicity, it is also around the management capabilities and digital solutions. So you can see there the third through fifth, ease of viewing transaction history, simplicity of digital software, and indeed the ease of omni-channel management are all critical factors in what makes a provider easy to do business with. Now, of course, most providers will be striving for simplicity, aside from, perhaps some of the smart POS devices or some of the value-added services we are perhaps looking at, all optional fundamental features. But digital channels are by far the most commonly used method of management for merchants, whether that is via financial management software, accounting software, banking software, acquiring software, etc. So what we can do if we really want to drive perception of ease of use, well, we can look at essentially what SMEs actually want improved with their main acquirers' digital capabilities. And the first thing we see there on the furthest left is a real-time overview of incoming and outgoing payments. So this is very, very indicative of SME's desire for visibility into their operations, something which we know that the real-time overview of incoming and outgoing payments can have. We know that it can have a very positive effect because we have already seen this within the consumer landscape as well. Important to remember, all SME decision makers are also consumers. And well, if you look at the likes of some of the newer fintech providers, who I won't name in this, as I'm sure you've all got someone in mind, well, the real-time overview of payments is definitely something we have seen as one of their big selling points. But being notified, for instance, when you make a transaction may not be something that, every individual or business relative are always looked at as soon as they get the notification. I do for categorization purposes, but what it does do is it provides businesses with a sense of security. If there is a sudden transaction, we are going to be notified about it instantly. And how can we notify them? Well, naturally, potentially on a mobile app as well, but there is a much more bigger question when we are talking about digital capabilities rather than just purely notifications. We can see there that businesses want to conduct a greater range of tasks digitally. They want to have that digital interface be simpler, whether that is on a PC or on a mobile app. So at first, what we are seeing here is, yes, a desire for greater digital complexity, but it can't be overwhelming and it can't be difficult for a business to use because, simply put, they will not use it if it takes them 3 hours to work out how to, review all of their transaction history. However, outside of that, we do see those fifth and sixth attributes there, data analytics and more in-depth integrations with other software solutions also coming in as some of those most wanted digital innovations. And what is interesting here is, again, when we start looking at it by the size of the business, we do see that data analytics and in-depth integrations become significantly more wanted, especially when a business has over, say, 500,000 in revenue. Not even necessarily as high going into the seven-figure range as we might expect. We very much see 500,000 as a big tipping point in both SME merchants and the overall landscape attitudes and behaviors. And well, my personal hypothesis for this is that there is very much a psychological effect when a business reaches 500,000 in revenue. It's okay. we've met our 500,000 milestone. The next milestone is 1 million. And naturally, when we see a business with 1 million in revenue, we also again start to see those changes. So what we are saying here is that businesses are always really looking towards that next step and what is that next big goal that they can achieve. And one way we can help SMEs achieve those goals is definitely through the digital capabilities. But the other way we can help them achieve those goals is by actually really understanding their needs, their challenges, and their trials and tribulations. So what we're just looking at here are which aspects of an SME's operations do they want acquirers to understand better, and more importantly, show that they have an understanding of these different areas. And when we look at, say, all SME merchants with up to 50 million, how many have at least one area they want acquirers to have that better understanding of? The answer is basically all of them. So 9 out of 10 SMEs want acquirers to have a better understanding of at least one of these areas, if not some else that aren't well on the slide right now. So what are some of these areas? Well, we can see there that the number one factor, relatively even across the business size, is that in-depth knowledge of the industry that a merchant is in. And while this is, and excuse me, and one of the reasons why this is very, very important is this idea of flexibility to a business's needs. So not just does the solution process our payment? Is it an invisible solution that we never really have to manually operate? But is it going to help us achieve our specific goals within our industry? And this is one of the reasons why we have seen certain providers within the merchant landscape really explode onto the scene within the last few years, because they are somewhat more arguably geared towards that industry tailored offering than perhaps some of the larger international and legacy providers. Absolutely not to say those providers don't have industry specializations. We know they have relationship managers and they have, well, collectively hundreds of years of experience in financial services, but really identifying those industry specific needs is one of the big future directions we see merchants moving towards and wanting. And just outside of that, we can see that actually the second and third there, going back to a point I made earlier, it is all around the end customer. So who are the SMEs end customers and what are those changes in the customer landscape or behavior are very, very important for merchants. But you will see there that there is that little bit of a drop off at that 500,000 threshold, where we do have that full understanding of how to resolve issues becoming a little bit more important. And what we are seeing here is really a change in the solution and a change in the services that an SME is using as they do go through those different life cycle stages of revenue. And the last thing I will just pull out here is the upcoming and changing economic or regulatory challenges. It has dropped down now into that 5th position, but I can assure you that during the pandemic, and indeed when inflation really first reared its ugly head, that this was definitely the number one factor across all different business sizes. But just something to consider in future, if we do see a resurgence in inflation or we do see any other major economic changes, we might see this really improve or really increase rather in terms of what SMEs want acquirers to better understand. Okay, and the last couple of slides then will just be examining some of the openness of SMEs towards AI in the context of payments. Now, I fully appreciate that this is definitely a bit of a buzzword over this year. However, it is also very, very interesting because there are a number of different potential opportunities, and I think it is very much anyone's guess at the moment exactly how AI could be used in, say, future financial services and payment landscape. So firstly, then, we'll just look at over the next 3 to 5 years, how do SMEs actually feel towards AI? Do they think it will be a greater benefit than threat? Do they believe it will be a greater threat than benefit, etc.? And well, the truth is that sentiment towards AI is definitely much more positive than negative, We can see there, just looking at that total market, around, say, 3 times as many SMEs would state that, yes, AI will be a greater benefit than threat rather than a threat than benefit. I appreciate that can be a bit of a mouthful. But while it is overall more positive than negative, there is definitely a large degree of uncertainty. So, yes, only 15% there would actively say they're unsure, but around 40% there would say that we don't believe it will have a strong impact on our business. And I think that's important to consider here is that, yes, while SMEs may not really think it will have a strong impact, this could very much be that they don't necessarily understand how it could be used within their business. One thing that we see in the UK that we don't see in markets such as Canada or the US, or indeed some of the markets in Europe, is this clear trend about believing AI will be a greater benefit. And in fact, that trend there is incredibly sharp, incredibly significant, particularly in that 10 to 50 million range there, when over half expect it to be a particular benefit. And what this is really indicative of is very much the top-down nature of innovation. And naturally, this makes a lot of sense. You know, when you're thinking of a merchant with up to 250,000 or indeed up to 100,000 in revenue, they're probably not going to be employing massive amounts of brand new, innovative, fancy, but more importantly, expensive technological innovations within their business. Those that essentially are within that top end of SMEs, fundamentally, they have a lot more money to play with and a lot more money to actually drive innovation within their business. However, and there is a however slash but here, while under 500,000 there, we're seeing that around just under 1 in 3 think it will be a benefit. When you actually start suggesting payment capabilities, those numbers do increase quite substantially. And what we're looking at here is the proportion of merchants that are comfortable with using AI within, say, different payment tasks or capabilities. The first one there, furthest left, we actually added this in as a little bit of a baseline and a benchmark to compare AI to. So we can see there that around 3 out of 4 SMEs are comfortable with the idea of using fully integrated payment software. So transaction data being automatically processed and reconciled holistically across the business. The way we position this is very much having a fully holistic and complete integrated payments software. And even with those up to 250,000, the micro merchants, we do still see the level of comfort there being very high at 71%. Elsewhere, when we actually start asking around some of the potential implications and uses for AI, whether that is robotic process automation for marketing and advertising, automating customer service requirements, or again, automating managing payment credentials from customers, we do see there that around 2 out of 3 SMEs across these different tasks are quite comfortable with that increasing significantly for those larger SMEs, going as high essentially to 90% or thereabouts when we are looking at, say, automating payment credentials from customers. Now, there is obviously one big question here. Now, are we really talking about AI or are we really talking about automation and machine learning? Well, I would say yes, okay, fine. We are talking more about automation and machine learning, but at least my personal hypothetical is that is going to be one of the more immediate implications and uses for AI is really going towards that next step of machine learning rather than perhaps an artificial general intelligence. However, that is very much a conversation for another day and potentially a conversation for our next webinar next year. So to just round off then with some of those key takeaways, SMEs are moving away from personal cards and paper methods when they are making payments. This has been replaced by true credit, charge, and debit cards and also digital payment methods. We do expect some of those increases in card use to continue because of SME's desire for a simple and convenient solution that, yes, is easily reconciled, but can also help with cash flow management. And I didn't quite mention this on the slide, but this is one of the big factors for SMEs and something that, well, is one of the big reasons why loans are necessary for SMEs. The challenge of cash flow can also not be understated, and payment can help that. I often like to think that, I've often heard that, well, payments are the lifeblood of a business and cash is the lifeblood of a business. Well, if that's true, then, well, essentially how a business is making and accepting payments are very much the veins and arteries within and the central nervous system within that business. So when we are talking about payments, and especially how businesses make payments, convenience is absolutely king. There are a lot of secondary factors depending on where that preference sits, such as, say, earning rewards can be more of a factor for cards naturally, and the ease of administration can be more important for those digital methods. But this idea of convenience and simplicity also extends to the acceptance landscape, both because of the effect on staff and customers. And again, we really, really cannot overstate how important that end customer is for an SME. So whatever solution we are looking at in the acceptance landscape, we should always have SMEs and customers in mind, because that is what they will be thinking about. One of the ways we can sort of drive that customer understanding and drive that level of ease of use, etc., is through digital innovation. And SMEs are looking for greater complexity, yes, including real-time payment overviews, but also the analytics and integrations. And those latter two there, especially a factor when we're looking at, let's say the high value SMEs of 1 to 50 million, for instance. When we are getting into that 7-8 figure range, those analytics, integration, and indeed the forecasting and understanding that they provide are definitely very, very important. And in terms of understanding, well, we can see there that, yes, SMEs really do want acquirers to understand their industry, but also the consumer behavior trends. And that can potentially be a very big differentiator within the merchant landscape. If a provider is able to give their SMEs consumer analytics and consumer insights, well, this is naturally going to help SMEs make better informed decisions and also show that an acquirer understands the goals, needs, and wants of an SME. And then lastly, yes, despite that uncertainty, there is a clear view that SMEs can see the potential for AI within their payment ecosystems. But again, we do think that this adoption will likely be somewhat top down in the UK SME landscape due to most likely cost, but also just simply also having the time and resourcing available within the actual business itself. And with that, I'd just like to say thank you very much for listening. If there are any further requests or any further information, do please contact Ash Shanab, whose details will be on this slide here. And I'll just take a quick pause now and open up to any questions. I see we've already got some in there. I will just have a quick sip of a coffee and I will answer some of the questions there. Okay, so looking at some of the questions in the chat, one of the first ones here is, do we expect recent changes when making payments to remain stable or reverse? So as I just mentioned on the last slide, we do expect the increase in card to continue, or at least the increase in card use to continue, and indeed the increase in digital payment methods to continue. However, we don't necessarily expect there to be as sharp an increase as there has been, say, over the last few years. The pandemic really did accelerate that decline of cash use, but there has been some late holdouts, for instance. So overall, yes, we definitely expect it to remain stable, maybe marginally increase in some cases, and we don't expect a reversion. Well, with the exception of any, major problems or changes. I mean, let's say hypothetically, if the UK's faster payment system went down or had a massive outage, we might see a little bit of a change in payment methods there, but I think it is quite unlikely at this time. Okay, so the next question there is just okay. So yeah, the next question there is just who are businesses using for electronic payments? Is it their main bank? Is it a mixture of providers? Well, honestly, the simple answer is, actually, it's not always nice to have a question with a relatively simple answer, is that it is very much the main bank. We haven't really seen any major uptake of either secondary payments companies or indeed secondary banking providers for electronic payments, with, say, some minor exceptions within the fintech landscape, but again, it very much centered around their main banking relationship. Mainly because, well, the main bank is often where a business will receive its money before they go to use it. And I think until we remove all costs associated with any transfer of funds, it's going to be the main bank directly to the recipient of the payment. Okay, so the next question there is just 1 second. Okay, so yeah, the next question there is what is key when looking for cross-border payments and what challenges do businesses face with international operations? So that's a good question and something that we haven't covered today and definitely think we will cover at some point in the future, probably with a bit more of a global view. And you are right, I am stalling a little bit for time here. So some of the big factors and big considerations when a business is making cross-border payments, perhaps unlike we saw in, say, the acceptance landscape, cost is a very big factor when making cross-border payments. A lot more so than, say, when making domestic payments because of the exchange of funds. Now, whether that is into euro, USD, or perhaps, maybe some of the Asian currencies, rupees, yen, etc., cost is already going to be a big factor because of that need for conversion that naturally we don't necessarily have within the UK for domestic payments. And indeed, if you do get perhaps some larger SMEs operating in Europe, may not be a factor for European payments, thanks to the single euro payment area, etc. So yeah, cost definitely a big factor when looking at, say, international payments compared to domestic. But another key factor and another key challenge actually is around the speed and timing of payments. So again, going back to something I mentioned earlier, where the UK does have essentially quite a unique place of, say, excuse me, of having, quite quick, quite seamless payments. Actually understanding the time spent for something to reach a recipient is much more of a consideration for international payments than it is for domestic payments. So those are a couple of different factors. But again, this is almost when you're actually talking directly about cross-border payments. If we're talking about international travel, then, well, we do actually still see cash and personal cards use actually being used quite notably and still being reimbursed. So it could also be an opportunity there as well to, I would say, align the idea of cross-border payment convenience to what we have with, say, domestic payments as well. Okay, and then the final question there. Oh, yeah, that's a really good one actually. And so the final question there: are the attitudes towards AI simply attitudes, or are they, and is it going to convert to action? Now, this is actually speaking anecdotally. This is something I was discussing with a couple of mates over the weekend, not necessarily in the context of finance, but more generally. So I am going to speak somewhat anecdotally here, but I think decision makers, yes, it will be attitudes, but I would expect AI's use to actually almost kind of creep into the business landscape somewhat unexpectedly and almost potentially under the nose of the people who are taking our surveys. So, for instance, thinking about, again, this is all anecdotal, but even things such as rewriting emails is already a business using AI. I myself, when I've had to look up, say, some complex statistical topics, I've used AI to give me a bit of guidance on at least where to look, if not actually some great explanations. For instance, when you're trying to understand really complex methodologies, then yes, AI can come in very handy there. We recently did a project looking at, say, all of the different enterprise resource planning software that a business uses, wanting to know those that specialize in certain verticals. Well, as you can imagine, there are thousands, if not tens of thousands of them. And this is the thing, AI, I expect it to kind of creep into the business landscape because of the time efficiencies. And I've already experienced it of turning what could potentially be a week or two's worth into a day or two's worth of work. So yeah, fundamentally, I do think it will convert to action, but I think it will start off very much as a trickle and very much as a creeping factor, excuse me, into the SME business landscape. Okay, and with that, I think that's all the questions we actually have today. So again, just want to reiterate, thank you very much for joining or listening today. And just a little note as well, this will be shared afterwards. We will be seeking some follow-ups, and please do check out our YouTube channel where we will be uploading this and a lot of the other series of webinars we will be doing, and there will be a lot more interesting content coming up within the new year. So finally, on that, thank you very much for joining today, and I will be signing off there and wishing you all the best for, well, the rest of the week, Christmas and New Year. Many thanks.